I'm very, very pleased to have the president of Business Angels Europe, Reginald Vossen, who to join us today to moderate this panel. Reginald is also actually the president, not only the president of BAE, but also leads BAN Flanders, a very important angel network in the Flanders region. So my pleasure to have you here, Reginald, and over to you to introduce your panel. Thank you.
Thank you so much, Jenny, for the nice words. And we all work for the same ambitions. And also here from Belgium, we really would love to see more women investing into the future. So that's why we are also with BAE, of course, in the ESIL project, so much fan of this project. I have the big honor to introduce my panel to you, which will be setting the scene on what are the data telling to us on the moment we are now on how angel investing done by women is moving forward. And we have three very, very reliable and good speakers for this one. First, we have Henry Whorwood from Beauhurst, who has been taking the pulse, and even more than that in the UK, which is obviously also a reference market for us all. We have Professor Laurence Cohen from the Finance School of Management in the University of Lyon in France, will be working and delivering us on the research which she has done on angel groups, women only and mixed angel groups. And we also have Kinga Stanisławska joining in from Poland, who is co-founder of the European Women in VC and also general partner and founder of Experience Venture Fund, giving us the insight on the VC women are active in the market. So I would love to give the floor first to Henry, perhaps, because Henry, you have been doing quite some elaborate work in the UK, and perhaps there are many lessons to be learned from what you have experienced in doing those studies. So if I may ask you, what kind of opportunities do you think that quantifying the number and understanding of the impact of female angels creates for developing effective policy measures to increase the level of women angel investing as a whole? So please introduce us and take us through a few slides which you have prepared, obviously, for this. And welcome once again.
Thanks very much, Reginald. I hope everyone can see my screen, and absolutely I'll address the sort of key theme of how data can sort of inform policy to improve the landscape for women angels. The sort of backbone of what I want to talk to you about today is a piece of research that we did in 2022, looking at the UK's full population of female angels. This report is freely available online, and I will be presenting only a truncated version of it. So do go get the full copy if you're interested. Firstly, just a name check to Jenny, and I know she alluded to it in her opening comments, but without Jenny's work, this research would not have come about. So we do owe that to Jenny, and you can read her words in the report. But I'll get, because I've only got a few minutes, I will get straight into the findings. Just a little bit about Beauhurst. We are a data company tracking the UK's economy, and in particular focusing in on those companies that are innovating or growing. As part of that, we look at every company that raises external finance, and in particular external equity finance. So any company that raises any amount of even friends and family rounds, and then angel rounds, and then VC rounds, those are all companies that are interesting to us. We're able to get a comprehensive view on this in the UK thanks to various filings that are lodged at our sort of central registry for company information at Companies House. Our job at Beauhurst is to then go digging through all of those filings and find the actual interesting information about interesting investments being done. We can then cross-reference that against what we see about the list of shareholders in those businesses, and that effectively is how we build up our angel investor data set. So I'm showing you now some summary stats, but the sort of key finding and what no one in the UK had put a number on before was actually just properly the angel population. Jenny previously had at the UK Business Angels Association had put some estimates together on the basis of survey work, but we then sort of went one step further and worked from the ground up. The sort of worked bottom up from all of the companies we knew about to identify what the overall universe of angel investors in the UK looks like. So there are about 250,000 people in the UK who own shares in a company that has raised external investment via equity. About 36,000 of those people have two or more have shares in two or more companies, and for this research, that's what we used as the threshold to identify an angel. Because within our 250,000 number there, some of those would be people who got their shares through sweat equity, and also people who had joined a company and had options that had vested. So in this 36,000, we were confident that we were getting the angel investors rather than people who held shares for other reasons. And then we were able to break that down by gender, primarily using a naming dictionary to infer the gender. We get a few honorifics as well through Companies House data, but that's how we built up our gender data. So it isn't self-reported, but for a data set of this scale, gives a reasonable indication of the breakdown. And you can see there that the stats are pretty stark. So 5,000 of those 36,800 are women. And the proportions get worse as you start to look at more prolific angels. So only 157 people at the time women in the UK were sort of prolific super angels investing in 10 or more companies. To come to your main question, Reginald, about what use this is and why why we think it's valuable that we did this research. I guess in the UK, the government is actually reasonably well exposed in terms of interventions to the sort of startup and scale up landscape, whether that's through direct financial support or schemes that facilitate financial support, or even through regulation. At no point were any of those schemes collecting the relevant gender data. So when pressed on points about the gender equitability of these schemes, they were able to just sort of hold their hands up and say, we don't have it. Whereas we know from some of these schemes, although they are very generous and good for startups, they could actually be exacerbating the existing inequalities. To give an example of that, our SEIS scheme, which is very good at helping companies to raise money, actually fundamentally exacerbates the wealth inequality that we see borne out by these numbers. It is a scheme primarily or majoritively used by men. So there is some discrimination basically baked into the schemes that support. We saw a very acute example of this earlier this year when our FCA brought in regulation to affect who could do angel investing through intermediaries. And again, that had a disparate effect on women. But part of the response there and the reason why it took a while to get that regulation reversed, which it now has been, was the fact that there wasn't good data. So they were able to say, yes, you're right, it might affect women more, but we can't quantify that. So we're going to go ahead with the regulation anyway. Whereas now, thanks to pieces of research like this, you can put a number on it and see the positive or negative impact of new policies. So I think that's the main reason why getting a data level, a benchmark for any of these things is really, really important. A whistle-stop tour through some other findings in the report. We break down the numbers of the sort of portfolio sizes that women hold in the UK. We look at the amount of investment that's driven. Although this is showing a decline, that's broadly in line with a wider market trend. Although it did slightly precede the overall market trend. So there are different dynamics again affecting women angels versus male angels, which again, if you're coming up with a scheme to support it, needs to be borne in mind that actually they might behave differently to what the rest of the male-dominated market is doing. We often hear about gender differences in gender in terms of the sectors that founders operate in. It's very interesting to see that that's not so much true in what angels back. This mirrors what we see in terms of the activity across the UK. So female angels are perhaps a bit more sector agnostic than female founders, seems to be suggested by the data. And that was a very quick whistle-stop tour. Apologies if I ran over my allotted time. Thank you.
No problem at all, Henry, because these are very valuable insights which we can all use in our further work today and also into the next months. Perhaps zooming in on some figures which were quite interesting, and perhaps also to a little bit give an extra weight towards the women back women. On one of your slides, I guess it was the third one, you showed that like 4,000 companies were backed by female angel investors, whilst 1,000 of them were women entrepreneurs. So it's not only about women backing women, women also back a lot of men. So the weight, the importance is even throughout the full market, if we get it right, huh?
Yeah, exactly. I guess if you look internally within the female-founded cohort, a higher proportion of the investment is backed by women. But absolutely, if you look at women's portfolios overall, they are less. They're not. They are more weighted towards female founders, but not. There's not a massive skew.
Okay, perfect. No. So that's obviously showing the importance of these female investors community within the UK. On the question which I asked why it's important to have these kind of reliable data, you gave, as a matter of fact, the full reason, which is government needs these kind of insights to be able to create measures, schemes which help investors in general, but also and specifically female investors to invest more. Could or should this lead for you towards some more women-friendly or women-targeting schemes? Is that also one of your ambitions, to try to get the government moving into that direction?
Yeah, I certainly think so. What's interesting in the two examples that I gave of sort of SEIS versus the change to sophisticated investor regulations, as they're called in the UK, the latter ended up being sort of sexist as an unintended consequence, which hopefully good data can help prevent that. And then in the former, it just wasn't considered as when the schemes were set up, it wasn't a framework by which people were thinking about this. And back then, if someone had raised it and said, should these schemes be furthering the causes of equality, the response would have been, well, we don't know what the impact would be. We don't have these numbers. So certainly, it should lead to people being able to come up with policies that that promote equality.
Okay, thanks, Matt. When we zoom a little bit out of this and going more to the methodology of your work, and also having in mind the ESIL countries in the 6 which were named by Jenny in the introduction, and which we will be working, how far is your research method applicable into those countries, and also more broadened into the full European context? What would it need? What conditions are to be met to be able to apply this methodology in other European countries?
Yeah, it ultimately varies. Some countries, it's like we can fully replicate our methodology, and actually we're in the process of doing it for Germany at this moment in time. So hopefully we'll be able to follow up, maybe even this time next year, with some data on Germany. But for other countries, yes, it really does differ. We're lucky in the UK, and we'll be lucky in Germany that the sort of central register of companies includes a lot of information that can be from which these trends can be extracted. In other countries, that won't be possible. They don't have a company's house equivalent, or they don't have the right level of disclosures made to their company's house equivalent. There are still things to be done, and I would say this given what our company does, but some data is better than none. So there are definitely things that can be done to track it. The way this gets improved everywhere is also just by announcing it more. If angels are more public about their activity, and I'm sorry, this put some of the burden then on female angels to surface this data, but if people talk about what deals they are doing, that actually makes these trends become more discoverable and the gaps become more observable, and hopefully it has a positive reinforcing benefit of you can't be what you can't see. So there could be a sort of win-win along those lines.
Yeah, absolutely. Talking about these gaps and these invisible parts, we are starting up now the support in several countries to start building angel networks, angel network associations, co-investment schemes, etc. through this ESIL program. To your opinion, which data could or at least should be captured from the start when starting up angel networks, national associations, co-investment schemes, in order not to have these black holes?
I guess one of the key things is to make as much of it public as possible, so that it's discoverable not just to us as a business, but also to academics and other researchers. And in terms of what's worth collecting, I guess the gap that we even struggle to see is the quantums of money that are invested by relative angels within a network. So we might learn that this specific network has done £1 million round or €1 million round into a company, but we don't see, and we might know that there were female angels involved, but we can't see where a female angel was leading versus not. So I think whatever information people can collect about the amounts, as well as just the fact that the transaction has happened, that's probably how we take our understanding further.
One last question for you, Henry, perhaps on getting one figure to remind us all of the 35% rule of women in syndicates or groups. There was stated that 35% was really, if you reach the level of 35% female in a syndicate, this impacts the decisions very positively. Could you elaborate a little bit on that one? Because this is a very important part in how we could build the best possible networks on gender equilibrium.
I'm sorry, is that my stat? I might be having a moment.
Okay, no, perhaps this is coming forward then when we move on to Laurence later on, but want to remind at least. So, okay, Henry, thanks very much for already this insight. Please stay online because we are going to move in to the next research, which has been done by Laurence Cohen in France, who has been doing her research very specifically on the relationships between female-only angel networks and mixed networks, with the question, does gender matter in driving active angel investment while investigating in these women angel-only groups? Laurence, thank you very much already for sharing your slides, which perhaps you could also put full screen below on the right. And I would like to welcome you and ask you the opening question on what does your research tell us about the way women business angels should most effectively be mobilized to maximize their investment capacity? So should we build more women angel groups, all women angels groups, solely women angels group, or more diverse angel groups? Thank you for sharing the insights of your research so far in France.
Thank you, Reginald, and good morning, good afternoon to you all. I hope my presentation answers all your questions. So the aim of this presentation is to investigate whether women angel behavior in a female-only group differs significantly from men and women angel behavior in male-dominated groups. The underlying assumption is that organizational context may be the driver of specific female angels' behavior and not gender per se. So it's a very young research. So we investigate the determinant to investigate the determinants of female angels' involvement in angel group activity. We collect data from 3 groups of angel investors. First, women in a female-only group, Femme Business Angel. This unique female-only angel group in France and first in Europe includes 160 active female angels. And at the end of the data collection, we obtained a final sample of 47 women. Men in a male-dominated group. Because in France there is no male angel group, we had access to data on male angel of the Savoie Mont Blanc Angel Network, SAMBA. At the close of the online survey, we obtained 47 responses from men angel. And third, women in male-dominated group. We delivered the same questionnaire to women from 2 male-dominated groups, Samba and Grenoble Angels, and we were able to collect data on 10 women, 3 from Samba and 7 from Grenoble Angel. These 3 groups are part of France Angel Network. The questionnaire includes 44 questions relating to human capital features and involvement in group activities. So, first, we focus on angel characteristics. We start by comparing women in female-only group and men in male-dominated group. Women are more likely to have higher educational level, entrepreneurial experience, finance experience, investment experience, and cumulative investment. And they perform better in terms of their returns on their angel investment. In terms of investment activity, we can see here, female angels are on average more active investors than their male counterpart, contrary to previous studies that indicate women lack experience in investment deal, conducting due diligence and monitoring the investment. Then we move on to comparing women in female-only group and women in male-dominated group. We find that women are similar in terms of education and entrepreneurial experience, and they have also similar investment experience and prior returns. However, women angel in female-only groups are more cumulative investment here than women in mixed angel group. In terms of investment activities, women in female group here are more involved in investment activities than women in male-dominated group, 2.38 and 1.30. Then we investigate the effect of investment experience on investment activity. We find that women in female only group conduct more investment activity, 2.31, compared to the 2 other group, 1.65 for men and 1.009 for women in male-dominated group, supporting our hypothesis that women angels in a female-only group are associated with more investment activity. The strong difference between the two women's groups suggests that the context plays a role. Finally, we investigate the effect of investment experience on the amount of cumulative investment by angel. Our result shows that men in male-dominated groups and women in female-only group have roughly the same cumulative investment, while women in male-dominated group are associated with lower levels of cumulative investment. We then interact these 2 variables with investment experience, we can see here. On one hand, results show that investment experience has little moderating effect on the level of investment by men and women, by men in male-dominated group and women in female-only group. On the other hand, we find that experience here has a strong effect. A strong effect in the case of women in male-dominated group. In particular, experienced women angels show an investment level of 2.43, while unexperienced women feature a much lower level, 0.94. This indicates that women angels do not feel comfortable investing in a male-dominated group unless they are experienced. To conclude, firstly, our study indicates that women angels in the female-only groups are, on average, more involved in investment activity than both men and women angels in male-dominated group and invest similar amount when compared to men, but significantly more than women in a male-dominated group. This means that a female-only group context could provide a safe space for full participation in the angel group activity. Secondly, the results show that the investment level of women angel in male-dominated groups increases with investment experience. This indicates that because the level of confidence increases with the investor investment experience, women angels gain confidence and feel more comfortable investing. We identify experience as a strong mitigator to female stereotype threat in male-dominated investment group. And finally, for the same human capital characteristic, women get involved in the activity of the angel group and invest just as much as men angels. But in a male-dominated group, women have to draw on a wealth of investment experience to invest at the same level as men. To answer your question, Reginald, why is this study relevant? Our studies support the importance of angel training for women angels. And so policymakers and institutional entrepreneurs who seek to support female entrepreneurship and expand angel market by including more women should consider the importance of angel training. Investing with other, more experienced angels through interaction and observation is an important source of learning. And second, our studies support the importance of creating stereotype-free spaces in the form of female-only group, a safe space for networking and full participation in angel group. Even so, this is only a temporary solution because as the proportion of women in the business angel market will increase, women-only angel groups will become less relevant. So the next steps of our study will be European projects in which we look at how women angels are involved in sustainability and social impact investing. It will be the next step. Thank you for listening and thank you so much for your attention. Thank you, Reginald.
Thank you, Laurence. Thank you for these valuable insights, which, as a matter of fact, really show the importance of having as much as possible women to join in and go towards eventually these female-only networks. Did you also try to investigate, and perhaps this could be also something into the future, which are the drivers for this? Because I can guess there are no financial drivers to have these differences in these three constellations. Is it more a psychological thing? Is it more a sociological thing? Has there been attention in your study yet for the drivers into how does these differences appear?
Yeah, thank you. It will be the next study because financial driver is very important. Just like men, you know, the young generation of business angels are really looking at their profitability also. So it's the same for women business angel. So yes, it will be the next step for our study. Yes,
because I hear, and we really much enjoyed to hear that you will be looking into much more broader European context to investigate. So, as a matter of fact, you are stating that we need much more research on this kind of data on women investing in the European context. Do you have any considerations how we could do this in the most effective way, the most structured way, to have as much as possible impact? Because you have learned from this French study, perhaps you already have some improvements in mind when going Europe-wide?
I think that we are doing a very, very important works on female angel in mixed and in female-only group, and we are beginning that in Italian with Italian business angel, and we go on with German, and we go on with European female angel. And I think that as much academic will study women business angel, as much we publish new information, new data on this women business angel, we will change, the image of woman business angel.
Okay, thank you so much for now, Laurence. Let's move to the third speaker.
Thank you, Reginald.
Kinga, thank you so much. Kinga, very welcome. You can add some very specific point of view on this, since you're mostly active within the venture capital world, being the founder of European Women Venture Capital. Could you tell us about the importance of having more women investors as decision makers and leaders in venture capital world, and how can we apply these insights to build also angel ecosystems in the ESIL target countries? Because you're from Poland, you're one of the target countries. You have the very high privilege of being really in the helicopter to see the two relevances there.
Absolutely. Afternoon. Thank you, Jenny. Thank you, Reginald. Good to see everyone. Yeah, so maybe just, starting a couple of points. First of all, I always ask myself, why are we here and why are we discussing this? Well, why is that? Well, we're talking about startup and venture, and we know that startups and venture build the companies of tomorrow. They build the products and services that will be used by us as consumers. They'll be used by companies. And we know that consumers, the percentage of women making consumer decisions is between 70 and 90%, depends on the service and the product at home. So not in a B2B setting, but in a B2C setting. Ultimately, most companies make something for the end consumer. So women are very, very, very important in this. And everything about policy around the work of the EU or any other country is always focusing on economic growth, job creation, GDP, making sure that it's inclusive, making sure we are delivering on deep tech innovation, on technology sovereignty. All of there, women are a missing piece or very much a minority to this. Now, that makes no sense. So, that is my kind of starting point for this. And as a player in the VC sector, what I very quickly realized running my own fund is that I didn't know other women running funds. So this is how European Women in VC was born, to cover entire Europe, not EU, Europe as a continent, meaning it is inclusive. It includes the UK, it includes Switzerland, it includes Iceland and other countries. We're talking about continental Europe. Now, what I wanted to see was collaboration between limited partners and female-led VC funds, so that when we have more women making investment decisions at a VC level, that should filter and flow down into more female founders being funded. And that is indeed the case. Every single piece of research, every single piece of analytics out there, and that doesn't matter if it's on the European continent or elsewhere, points us clearly to the fact that capital flow matters. And if we choose to back women investors, we will indeed have more female-led startups funded. And the same goes for angel investing. If we allow women to be angel investors in the best deals out there, to really make those returns on those deals, to sit on the boards of the best startups in Europe, we will have more female-led startups funded, and we will have more wealthy female angel investors. Now, the problem we're facing really is that ventures, startups, angel investing, all these elements are very much unequal today. It is not an open and fair asset class. We have statistics that prove it across every single market. We know that in venture, women manage only 8 to 9% of all capital, meaning 91 to 92% is managed by male colleagues. This results in what gets invested. We also know that women receive a very, very small percentage as CEOs of startup money. We know that mixed teams receive much, much more, but still the gap to male only is ginormous. We always, regardless of the growth of the market, have male only startups receive over 80 to 85% of all capital flows. And that is clearly wrong. So what can we do? Well, first of all, we can talk about these stats and their impact. We can talk about how anything that has a public element to it, i.e. public money, which is actually over half of venture money in Europe, should go to mixed teams. Why is it going to male-only teams? And why has this been the case for the last, since, I guess, these institutions were born? Why is that happening? Why is it that women pay half of the taxes, but do not have the ability to manage the capital? Why is it that female colleagues, female angel investors, are not being invited into the best deals out there so that they can build track record, they can build wealth, and they can build the next rounds of startups? So I think all these questions we need to ask ourselves and look at what we can do. So as European Women in VC, for the last 4 years, we have been publishing research in collaboration with many, many institutions across Europe, with about 80 funds, with a large number of LPs, with the help of institutions like BPI France, like CESI, like NATO Innovation Fund, and in collaboration with the IB and EIF. Everything that we have published points to the fact that, first of all, women are more capital efficient. So whenever you invest €1 in a woman, you get much more back than if you invest in a male-led startup. Now, in different regions, it's a different number. In the US, it's about 1.35x. In Central Europe, which is the region that we focused on with our first piece of research 4 years ago, it's nearly 2x. So at a time where public money is lacking, we have to finance things like the war in Ukraine and other things, post-COVID recuperation. Shouldn't we be backing the women who are the most capital efficient? That would seem to be the logic. And I do invite you to have a look at the research. It's available on our website, europeanwomenvc.org. So, that we looked at Central and Eastern Europe. We also looked at what do mixed teams and more women on the investment team and investment decision level deliver? Well, for every 10 percentage point more women on that level, we get 1.3 percentage point more IRR every year, and that's key. This year, we added an extra element to say, what do mixed teams deliver that is on top of returns? And what we found was, from the 320 different funds that we managed to get in our survey, 88% of those believe that on top of returns, you also should deliver impact, because that is something that is aligned with their mission. That is something that is aligned with their personal values. So indeed, mixed teams outperform. We need to be inclusive. We need to work with the male colleagues. We need to sit in the same room. We need to use such opportunities as today's workshop to ensure that the women angel investors are indeed building value for themselves, first of all, getting the returns so that they will invest again, so they will be in the best deals. Together, we need to work on that to make sure that they are present at every part of the ecosystem, which today is just not the case.
Okay, Kinga, thank you. Just one small question and one short answer, please. Did you also have a look on how the evolution is towards women angel investors and VC led by women? Because obviously VC managers could also roam into the space of becoming an angel investor themselves. Do women VC managers also do this? And secondly, do you also see the reverse situation in which more women angels tend to pull together and put up a VC fund led by women?
In both cases, this is still rare. There is an amazing example of a female community getting together to form a leading early stage VC fund, which is in Germany. It's called AUXO Female Catalyst Fund. It's an absolute awesome fund, which is doing very, very well. From my own perspective, in my fund, 10% of the LPs were female. On another note, looking at it the other way, I do believe that we need more women to be startup founders with a large successful exit who then can become angel investors and give back to the ecosystem. To do that, we need to invest more in those women. We simply need to put to the side all these ideas about mentoring programs and just give them the capital to be able to iterate and reiterate on the projects that they're working on, to find those product market fits, to scale those companies, and to be truly, truly successful. We do have some examples of that, yes, indeed, but we need much, much more.
Okay, thank you. I see I have only 1 minute to wrap up. I will do my best to do so. Thank you once again very much, Kinga. So delivering to you, Jenny, now with a short wrap up of this first panel session on the importance of the data on women investment as angels. Well, I think in order to grow the number and the activity degree of female angel investors, we do need reliable data, not only on a national level, but a Europe-wide level. So that's one of the ambitions we could strive for. We have heard that women are backing women, but it's not alone about women backing women. It's women backing companies in general, which we didn't mention, but which is the case, is that women back much more sustainability-driven companies as well. That has been proven as well. So working into the future, that's the right route to go as well. I think it's now up to us within the ESIL framework to bring the knowledge of all these ESIL towards all these ESIL countries, to give them a head start, to learn quick and start quick based on the data we have already received. And I think the very most important positive message, having more female entrepreneurs will eventually bring us to have more female investors. And and have more angel and VC money flowing to female entrepreneurs, and which obviously bring higher returns. So with this short wrap up, I gave the floor back to you, Jenny, hoping I've been able to do this right in time.